BYD have just slashed prices of their cars, a wide range of models, 25 different models of car that we know of, maybe even more than that, at least 25 by up to 34%. This is not a demo model for 34% discount. This is up to 34%, between 10 to 34% off the price of all of these models, which is crazy. Why are they doing this? Well, Deutsche Bank says that inventories are at breaking point. BYD's dealerships across China just have too many cars. There's too many cars. They have apparently 4 months of inventory. They can't hold any more stock. They've got to clear this stock out. And there has been some reports about this. I haven't done any reports until now because I didn't have any official confirmation to know if that was true or not. Now we know it is actually accurate based on Deutsche Bank, who are reputable analysts, investment analysts, saying the bloodbath is about to come. When I say bloodbath, I mean you've got a crazy situation here where the biggest car maker in China is discounting prices of its cars at just insane levels. This will have enormous effects across the entire automotive industry. Who are the most exposed manufacturers in America? I mean, the car brands that are going to suffer the most because of Donald Trump's 25% tariffs. Well, obviously companies like Audi and Porsche are pretty screwed because they don't make cars in America at all, not even a single one. But other brands might be even more exposed in some ways. I mean, well, nearly 1 million cars sold by Toyota in 2024 in America were made outside of America. And, well, when it comes to Honda, of the 1.4 million cars that they sold in the United States, nearly 600,000 were imported. Hyundai say they're going to invest $11 billion in the US automotive industry, but it's going to take years for that to play out. At this point in time, Hyundai is extremely exposed to Donald Trump's tariffs. Of the 836,000 cars that they sold in America, 515,000 were made outside of the United States. That's 62%. What about Nissan? Well, Nissan's actually in the worst situation. Nissan sold around about 924,000 vehicles, that includes Infiniti, in America. Of those, 55% were imported. 55% were imported. In other words, 55% will get a 25% tariff on them. But, of course, none of America's top 20 most American-made cars are Nissans. So even the Nissans made in America will also be taxed or get the 25% tariff because most of their parts don't come from the United States. Nissan is in it's in a position here financially where I don't know how it's going to get out of it. I honestly think Nissan will have to either become a subsidiary of Honda, or it will simply be sold to a Chinese conglomerate. Maybe Geely. Maybe Geely's already offered. Who knows? Kia sold 796,000 vehicles in America last year, which was an all-time high. 68% of those, or 540,000, were not made in America. That's going to be tough for Kia. Subaru, 667,000 Subarus, in fact, around 670,000 were sold in America last year. Of those, 63% were not made in America. That's 420 to 440,000 were not made in America. The Volkswagen Group, yeah, they're kind of screwed as well. In total, they sold 652,000 cars. That's Volkswagen, Audi, and Porsche combined. Of those, 470,000 were imported, 72.2%. That's a very high percentage. So, at least 72.2% of all cars are being sold by the Volkswagen Group, Audis, Porsches, etc., will have a 25% tariff imposed on them. Mazda sold 424,000 vehicles, which was its best year on record. And Mazda's probably at very close here between Mazda and Nissan on who is the biggest loser to all of this. Mazda sells less than 1 million cars a year. So around 50% of all Mazda sales worldwide come from America. But Mazda makes very few cars in the United States. Of all the 425,000 cars Mazda sold in America, only 20% of those were made in America. 80% were imported, 79.7%. Mazda is in big, big trouble. Mercedes-Benz is also in trouble. I'll get to them later. They are one of the most exposed as well. 64% of all Mercedes-Benz were imported. BMW Group, same situation. Of the 400,000 cars that they sold, 57% of them were imported as well. Prices of most cars in the United States will go up this year as a result of Donald Trump's 25% tariff on all cars not made in America. Not only tariff on all cars not made in America, but also on all the parts coming to American cars. So even companies that make cars in America, all the parts that they use that are not sourced from America, they will get a 25% tariff put on those parts. This is going to be devastating for some car companies. Some car companies are going to be just absolutely destroyed in terms of their United States sales. Other companies will do, well, they won't be affected anywhere near as much. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Very, very difficult times now, isn't it, for many car makers because they're being absolutely spanked in China, which is a much bigger car market than the United States, around 31, 32 million cars. That's around double the number of cars sold in the United States. But this means if you put the United States and China together, those two car markets represent around 60% of all global sales. And if you're a car company who is getting its pants pulled down in those two countries, those two regions, then you could go bankrupt within a few years. It's very possible it could even happen faster than that. So let's have a look at which car companies are going to be in trouble. But first of all, will prices actually go up in America? Absolutely, they will. This is what Donald Trump said. This will continue to spur growth like you've never seen before in the US automotive industry and in US manufacturing. Now, will that happen? Yes, but it will mean, well, cars are going to cost you more money. The policy will push the price of new cars soaring, say some analysts. And in fact, Anderson Economic Group says that new car prices will skyrocket. The president's remarks today suggest that automobile buyers and automobile workers are in for a shock starting in less than a month, said Patrick L. Anderson, the firm's CEO. Tariffs at these levels mean cost increases of $4,000 to $10,000 US, including on most American cars. Tesla, of course, they won't be exempt from this because their cars aren't completely made in the United States, but they will be in the best financial position. This is definitely going to help Tesla more than anyone else.